Welcome to this Vox Markets presentation. Joining me right now is Dan Bett, CEO of Hummingbird Resources, and the team for their Q2 operational and trading update presentation. Dan, take it away. Afterwards, we'll have some Q&As. Thanks very much.
Morning, Justin. Thanks very much for having us on. On the call, I've also got Anthony Coken, who is our Chief Operating Officer, and Ed Montgomery, who is our Head of ESG and Strategy. And thank you for everyone dialing in to hear our Q2 results update. So before I hand over to Ed and Anthony to go through the details of the results, I think it would be useful to just set the scene and set the picture a little bit. In Q2, we've had an extremely busy quarter, and we've seen a steady improvement in operations at Yanfa, which we'll go through in detail through this presentation. I'm aware that obviously there's been intense focus on the operational performance at Yanfa, and that performance underpins all of our strategy and all of our ability to develop and grow the company. But all those strategic and growth initiatives are on track, and we've been extremely busy. And just to highlight what has happened during the quarter, we obviously brought out an update to our group resources and reserves, increasing both our resource inventory to over 7 million ounces across the group, and our reserves up significantly to 4.13 million ounces of gold. We have also produced maiden reserves for the underground at Yanfa, increased the reserves at Carusa, which are exceptionally high grade for an open pit operation, which we should highlight, and maiden reserves at the large scale Digby project in Liberia. Our joint venture partners in Liberia brought out a feasibility study on the Liberian Digby project, which showed extremely robust economics with an NPV5 of $690 million. So we will be spending a lot of time in H2 working with Pasofino to evaluate our strategic options to take that project forward and maximize shareholder value in whatever way we can. I'd also like to highlight the development project of Carusa in Guinea. This project is full steam ahead, and we will go into detail on that during this presentation, but it's tracking on time and on budget, and is obviously going to be a seminal moment for the company where we can become a multi-asset producer. Finally, I'd like to say a lot of work in the quarter has happened on the underground developments at Yanfa, not just our maiden reserves, but also the development work and sequencing of how that can be integrated into our mine plans to deliver a base load of 40 to 50,000 ounces of ore into the Yanfa operation and support longer term production at the mine. So with those sort of opening comments to try and set the scene as to everything that is going on across the group, I'm going to hand over to Ed and Anthony to go through the Q2 results and the performance specifically at Yanfa. Thanks very much.
Yeah, thank you, Dan. Just to go through some of the key highlights that we've seen from Yanfa, the operational performance. We've seen an increase in gold production ounces produced of 29%. Mining productions have increased 26%. Plant throughput has increased by 20%, and AISC has lowered by 17%. With some more granularity on that, the ounce production profile is essentially the culmination of numerous work streams of improvement that have been going on in the business now for the best part of 9 to 12 months, and all of those work streams continue. We're pleased with our mining performance. The mining volumes are above the Q1 numbers, so we've moved in a good direction there. There still are some challenges, and we're working through those, and we have resolutions along the way. The plant throughput has been positive. We've mined additional oxides from the Senamali West pit, and we've been able to put those and process those through the plant. So again, another good upside story there. Recoveries have remained online and are a positive story, circa 95%. And our gold value coming out of the pit has increased incrementally. This has been another positive story with the works that we're doing in the background, predominantly in relation to blast management and dilution control. As part of the journey, as we continue with these improvements into H2, we have introduced now also a intervention team on site that are working with our team to further improve and bolster our performance. So just on that, I'll hand over to Monty to talk us through the next steps of Carusa.
Thanks, Anthony. Well, this is some graphical pictures of the advancement in the civil works that are underway at Carusa, which Dan articulated, and also Anthony. You can see here on the left the building of the CIL tanks. We also have a video that will be released today, shows the rapid advancement of that, which we highlighted in our last quarter, and they're progressing to plan. We've got major earthworks that are underway. Cement foundation works have started. You can see here the middle image is the mine camp, which is, you can see the foundation works have begun there. We'll start implementing infrastructure such as fencing and other infrastructure relating to that. So that's well underway. On the right there, you can see the cement foundation, or the cement works that are underway. They are ramping up in line with our foundation works that are ongoing. So as Dan said, and Anthony, it's advancing rapidly with civil works, as you can see here, towards first gold pour by the end of Q2 2023. I'd also just highlight that there's a lot of community engagement programs that are underway, and we are now advancing in terms of implementing both community livelihood and projects such as garden markets, training, healthcare support, and infrastructure support. And then we will ramp that up as we begin production next year. And that goes to the next slide, which basically we've probably seen before in terms of our timeline towards first gold pour by the end of Q2 2023. As I said, we've had our reserves and resources update out as planned in Q2. And with this presentation and further multimedia presentations going forward, we'll highlight the progress towards that first gold pour by the end of Q2 2023. In relation to Digby, I'll talk through this. As Dan said, we had out on the 13th of June, a very detailed release from our Pasofino, our partners in Digby, which basically highlight a very robust and economically sound project, and a very big project. Some of the key highlights that Dan articulated, but just to reiterate that, pre-tax MPV of a high value of 690 million, very good IRRs of 26%. This is a very low AISC profile operation, just over $1,000 an ounce, strong payback period of 3.5 years, and a long life of mine of 14 years with circa 200,000 ounces per annum in the first 5 years, and a very low strip ratio. So this is a big project. It's infrastructure ready with a big reserve profile of 2.74 million ounces. And really, it's got a massive exploration upside. But as Dan said, we are now underway with a very detailed strategic review about the best options for the company, how to maximize the shareholder value of this asset, of which I lead. We have weekly meetings on this, and that is moving ahead, and we'll detail things as they happen to the market when we can, but that is progressing. In terms of the financial summary, you'll see in the release a couple of the key highlights. Like the operational trends, we are seeing improvements. Gold sales improved in line with production performance, up 35%, just over 20,000 ounces. Average gold received during the quarter was a bit less than what was received in Q1, but still a robust number of $1,851. AISC, it improved by 17% from Q1 levels down to $1,859 an ounce. It's not where we want the AISC profile to be, but the trends are improving. So we expect that trend in AISC profile to continue in line with production expectations. We would note that ongoing inflationary cost pressures, especially from fuel and consumables, the full year AISC guidance will be reassessed at the end of Q3, and a further update will be provided at that time. In terms of VAT, the ECOWAS sanctions were lifted in early July. That is a positive, both on operational ability to move people, goods and services, but also VAT recovery against taxes payable has commenced. So that should be a general net cash positive going forward. In terms of a net debt, including gold inventory, it sits at just over 60 million. up from 42.4 million in Q1. We've still got 23 odd million available on debt from Chorus Bank that we have yet to deploy for Carusa build. And also I would highlight that we still retain an overdraft facility with Chorus Bank of around $20 million. So we do expect, in line with production and AISC profile improvements, and improving cash flow situation for the second half of the year. So I think that's the main summary of the key highlights from the operational results. I'll hand it over to Dan, and then we can close with a few questions maybe from you, Justin.
Thanks, Monty. I would just close by saying, whilst Ed has highlighted the global environment that is obviously difficult, with geopolitical issues abounding all over the place and affecting all businesses, and we're not immune to those inflationary pressures. And I'm also slightly bemused by the behavior of the gold price, but that is obviously outside of all of our control. And I hope that we'll see a strong gold price in the gold market going forward. Obviously, we're in the business of gold mining, and that's what anybody investing in Hummingbird is also hoping on. But I would like to highlight on the progress of Hummingbird. And I think it's without doubt we're on the cusp of a seminal moment in the company, where we transition from being a single asset company to a two-mine company in two jurisdictions, with diversification of cash flows, of risk, and operational challenges. And I think all focus is obviously on maintaining the progress at Carusa to deliver first gold on time and on budget. We're obviously equally focused on maintaining the incremental improvements at the mine site at Yanfa to keep the production profile increasing and driving the costs down, and looking to integrate the underground at Yanfa into our mine plan. So those three things, coupled with developing our strategic review on Digby, that's what we'll be focusing on H2. Thanks everybody for your time and support. And before I hand back to Justin and we take some questions, we just have some drone footage of the latest construction update at Carusa that we would just like to play to bring the development project to life. Thanks very much.
Thanks, guys. Thanks, Dan, Ed, and Anthony here. Thanks for that Q2 operational trading update. I got a few questions to get through. First and foremost, you've highlighted that mining volumes have picked up. Is this sustainable?
Yeah, thanks for the question, Justin. In short, the answer is yes. The plans we had implemented late last year with the additional excavators are all in play, and that's reaping rewards and benefits. There are still some challenges, and we are working through those, but essentially the foundations are there to keep the increased volumes where we need them.
Excellent. Okay. You've also announced a big increase in reserves there. Explain what this means to the company, if you could.
Essentially, increase in the reserves, which is now fourfold, allows us to get life of mine at both Yanfa and at Carusa. So 7 years at Yanfa and also 7 years at Carusa. It also now allows us to look strategically at what other near-term assets and conversion of resources we can prioritise to build towards the 10-year life of mine goals that we have for both assets. So I think it's a good news story. It gives longevity to the operations and to the company.
Okay, and lastly, the build for your second mine is on track, seems to be progressing. So what are the risks here? What are the worries? What's the market missing here?
Good question, because obviously building a mine in Guinea is a challenging undertaking with 1,000 moving parts. I think that, as we've said in our update, we are very happy with progress. We're tracking on time and on budget, and time and budget are the two biggest risks to building a mining project. We are lucky in that a lot of the project was fixed costs, so a lot of the inflationary pressures on things like steel have not affected us. And as it stands, we're not aware of any risks to that budget. But I would say, you know, you only have to raise your head and look around you to see there are challenges everywhere in this, whether it's fuel or freight or other inflationary costs. So we're watching these things every day, but I don't think there's anything that the market is missing in terms of budget. I think those risks are well highlighted. In terms of time, there's any number of things that can cause a delay, whether it be a political event or a logistical event, or a road goes down, or freight is delayed, or all these things. But again, all these things are standard risks. There's nothing out of the ordinary that we're aware of, and I think we're on top of all of those risks, and the construction is on time. The other thing, as well as time and budget, that is a risk is obviously when you've built the project, you're ready to run the project, and suddenly the next day it becomes a totally different business. You go from a construction company to a mining company, effectively, in Guinea. So that's what we call operational readiness. And I would say we've invested an awful lot of time already in making sure that we are operationally ready when we start at Carusa. So that's just everything from ensuring your contracts are in place early to ensuring you have the processes and people employed and in place to deliver operationally. And I think that's something that we're definitely putting a lot of focus into on our second mine, more so than we did at Yanfa. So there's always risk, and the great saying is it's the unknown unknowns that trip you up. But I think we put a lot of time in identifying everything we possibly can. I don't know if you have anything to add to that, Anthony.
No, I think that's you're correct there, Dan. So in short, I think it's been quite a healthy quarter for improvement, but there's still a journey to be traveled. We're still not where we want to be at Yanfa, and we'll continue with all the programs and foundations that we've set.
Excellent stuff, guys. Dan, Anthony, and Ed, thanks for that presentation, and hopefully we'll be catching up in the not too distant future. Thanks a lot.
Thanks, guys.
Thank you.
Justin.